How's it going, guys? My name is Franker and welcome back to the channel. Now today we're going to be talking about real estate cycles, more specifically the 18.6 year economic cycle, which you guys can see on screen right now, and how by using this and by looking at the current data that's available, how we can predict housing prices to continue to increase. I know it's hard to believe at the moment that despite house prices being absolutely ridiculously expensive depending on where you live, that they could rise even further. But in today's video, I'm going to explain how that is the case. So make sure to stick around. But before we do start, we're currently at 207 subscribers. So if you do enjoy this sort of content, we typically cover cryptocurrency content, a little bit of real estate here and there. So if you do enjoy this sort of content, we try to upload weekly. So do subscribe, make sure to like the video, and leave any comments down below. If you've got any suggestions, comments, whatever you want to say, feel free to comment them down below. Now, the first thing we really want to understand is what is the real estate cycle, or how does it work exactly. Now, there is an entire book about this. It's called The Secret Life of Real Estate and Banking. So if you want to go check out that book, I think it's definitely worth a read. It goes into the 18.6 year cycle a bit more in depth. But for the sakes of this video, all we really need to understand is that each 18.6 year cycle, there's roughly 14 years up and then 4 years down. So that's what we're looking at in real estate prices. This isn't stock market, cryptocurrency, whatever else assets there are. This is specifically real estate, and what we're talking about is most Western countries and specifically the United States. And as we can see here on the chart, we've basically got plotted out our different points. So, the bottom of the cycle being marked in, 2011, 1993, 75, 55. And then they've got a mid-cycle slowdown, which they often talk about. Then we've got the peak. So we can see, obviously, the peak of the cycle last time was that 2007 was the peak. And then after that, we got the GFC. And then we go into a bottom. So we can kind of see how this cycle spans out over the course of, 18 years roughly. And we can see also, if we go, 93 to 2011, bottom to, 1993 to 2007. Bottom to top, you can kind of see how long these cycles can last. Now, where are we right now in this cycle? If we're thinking, okay, the bottom was in 2010, 2011. We've had our mid-cycle slowdown, and we are getting right into the final phase of the 18.6 year cycle. I know that's crazy to think that we're going to go into a parabolic stage, or kind of he calls it the winner's curse, where things get really crazy for the next couple of years. But that's where we are, and we're expecting to peak in roughly 2026. Obviously this is all well and good. We've got a chart saying that it can predict the future. Obviously it's not 100% perfect, but where are we in this cycle? Is there things to support this argument? And there definitely is. So let's jump into that now. Now, this is an Australian article by the ABC. Now, it's a little bit old. It's from October 2023, but it's still very valid, that property values are tipped to reach a new all-time high. So I think since publishing this, since the publication of this article, housing prices in Australia have reached an average all-time high, which is absolutely crazy. Australia is already one of the most expensive countries in the world. So we can see, if we just scroll down, Adelaide, one of our big cities, has risen, 1.7% in the last month. Brisbane, 1.3%. If we scroll down, Canberra, 0.2%. Darwin, 0.1%. Now, there are smaller cities, so I don't think they count as much. Hobart's actually decreased, but if we get into Melbourne, the big one, Sydney, Perth, all increasing in price, which is just absolutely crazy that property prices in Australia, despite the insane, the price they're already at, we're looking, the median house price in Sydney being like $1.4 million, something crazy like that. Despite interest rate hikes, prices are still going up. How is that possible? Now, if we go and we have a look at the US, now this article is also, so this is from October 24, so it's a couple weeks old now, but the US housing market needs, hang on, there we go. The US housing market needs 1 million. Oh, it looks like this video is about to load.
All right,
Hopefully
button overseas.
Sorry about that. So the US housing market needs 1 million more homes to satisfy demand. there is an absolute shortage in housing right now. So, you can see more than 1 million additional homes need to enter the US housing market to better meet demand and pull back the upward pressure on housing prices, according to an industry economist. In other words, an inventory of 2.2 million would help satisfy demand. So what they're saying here is that, demand is well and truly outpacing the supply. We have supply shortages in the market, and there's a reason for that. If we have a look at since COVID, since all the lockdowns and everything, inflation has really gotten out of control. We're at record defaults on new construction programs. A lot of these countries, Australia, the US, they have high immigration ever since the end of COVID. Obviously, immigration was basically paused during the COVID-19 pandemic, and since then the floodgates have really opened in a lot of countries, and we're seeing mass immigration into countries. And the simple matter of fact is that housing market, everything that the country isn't keeping up with the demand coming into the country, and supply is falling well and truly behind. And that's the same case in Australia. That's why we're seeing housing prices rise so significantly, even though they're well and truly way too expensive for the average Aussie to own a home. The matter of fact is that with demand continuing to increase and the supply not keeping up, housing prices must go up. Now, to give you guys a very simple explanation as to how the absolute lack of supply at the moment in the housing market is affecting the real estate, the cost of rent, the cost of housing and construction. We'll have a look now at an economic model that I've got for you guys. Now, don't click away. I know economic models sound really boring, but this is a really, really good tool to basically simplify how we look at the cause and effect in the housing market. So what we've got on screen now is the 4-quadrant model. So on the bottom we'll start on the top right corner, we've got rent, and we can see a line representing the price of rent. In the top left hand side, we've got the price, and then in the bottom left, we've got construction, and in the bottom right, we've got supply. So at the moment, we've got a shortage of supply in the market. Now, what sort of effect does that have? Well, I'll draw some lines for you guys, and as you can see, if we draw this line up to the rent, you can see that a shortage in supply will increase the price of rent. This is just simple supply and demand. There's far more demand than there is supply, so rental prices will increase. Of course, with an increase in rent, the housing prices will increase as well, because effectively you're getting more of a return for your investment, so people are willing to pay more. Obviously, if you're only getting $400 a week rent, maybe you can only really justify a $400,000 house, hypothetically. But now that housing prices or rental prices, are now $600, $700 a week that you're going to be earning in rental money, you can justify charging, or paying, $500, $600, $700,000 for a house due to the price of rent increasing. And now if we look down at construction, obviously if housing prices increase, construction will increase because people are looking to basically get in whilst the housing prices are high, build as many houses as they can, sell those for the highest price possible, and make the maximum amount of money whilst prices are high. There's no point building tons and tons of houses if no one's going to buy them, and if there's an oversupply. But now because housing prices are so high, we would expect a boom in construction. And what does a boom in construction lead to? Well, it leads to an oversupply of houses. And then you can imagine it's kind of like an endless loop. Well, an oversupply in houses should lead to, lower rental prices, lower housing prices, lower construction, oversupply, rinse and repeat. And that's kind of how the housing market bubble can occur. Quite simply, it's a simple way of looking at it. But you can see how just simply the lack of supply at the moment is affecting the housing market. And you can see that we're kind of at this point now where we're seeing the construction boom. People are wanting to make money on this. If we go back to our Fox article, you can see here that we've got a bunch of different these are construction companies or housing companies in the United States that build houses, and you can see that they are absolutely pumping. If we have a look at these on the chart, we've got Dr. Horton here. This is one of the building companies in the US, I believe, and you can see how, obviously we had our peak in 2021, and people would have said that's the end, the real estate cycle's over, we've had our COVID boom, but since then we've bottomed along the 200-week moving average, and we've reached new all-time highs. Of course, there's been a bit of a pullback, but it looks like things are still very strong in a bullish pattern, as there's a big rebound bar here. Let's take a look at another one of the companies, the Lennar Corporation. I mean, it's almost the exact same, right? They're clearly, we've been in a big bull market here since, '09, pumping up into new cycle highs. It's, we can see we've broken these cycle highs. We're above them right now. So there's clearly, good sentiment in regards to construction companies that are going to be building these new houses. So it looks like right now we're kind of in the construction phase. If this is making sense, my thought process, we're in the construction phase of the real estate cycle, where we're seeing huge amounts of construction to try and meet the demand. But that's obviously going to take a long time. These 1 million homes that need to be built, it's not going to happen overnight. It's going to take years to build these houses. And that's probably, once we reach the demand level and once, demand reduces a little bit, that is likely when we're going to see a collapse in the housing market. And if we relate it to our 18.6 year cycle, we can see that, 2026, where we are now, we're seeing that construction boom. This is where when we're talking about the winner's curse, people are thinking, the housing market is unstoppable. This thing is never going to go down. No one's ever going to be able to buy a house. The next generation's doomed. All those sort of things that you'll hear. This is where it happens in these last couple of years in the cycle. We're going to get a construction boom. People are going to be absolutely all in on real estate. That's what you're going to see over the coming years. And we can see the start of it now. If we go back, we can see how people are very bullish on building companies right now. You can see, the prior peak just before, if we have a look, when Lennar Corporation last peaked, if I can find what I'm looking for, the circle, think about when this is. This is in 2005, 6, 7, right before the GFC. Think about where we are now. We're reaching all-time highs. Give it a couple more years, and we will likely be in the same situation we were back in 2005, etc., etc. Let's take a look at another example. Magic Investment Corporation, obviously breaking into cycle highs now, nowhere near its prior all-time high, but we can see a similar picture, right, where we've got, all-time highs right around, where is it, right around 04, 05, 06, and then things just absolutely collapse. Are we getting to that point now where we're, somewhere in the 23, 24, 25, and then things collapse? We could be right at that area. Let's take a look at one more chart. Here we've got Toll Brothers. Now, same thing again, similar story, right? So we've got 2005, right around here, where the, construction bubble probably, finished. We finally met demand probably, and then in 2006, 2007, that is when the markets absolutely collapsed. Now we could be at that point right now, and we could expect, if we draw we'll try and expand this out just a little bit further if I can find the right tool that I'm looking for. A date range, there we go, 2005 to, 07 is about 76 bars. Hypothetically, if we just extended this out 76 bars, you can see that we're getting into mid 2025, late 2025, early 2026, sometime around that time, which lines up perfectly with our 18.6 year cycle. I think last but not least, the other important figure is what are housing prices actually doing? So the Case-Shiller Home Price Index, you can see that we're just marginally away from all-time highs, which is just crazy to think about. And it's a similar story here again, where we've got our all-time high in the prior cycle landing around June, of 2006. And then by the time the market actually collapsed, the stock market collapsed, everything kind of fell in on ourselves. It was well after the all-time high. We've got August '07, well after the all-time high, and that's probably something similar that's going to play out here. If you could imagine, okay, this is the all-time high, let's say, and then somewhere around here, prices, if we just draw a box, where are we? Oh god, we're in 2026. If we just draw a box, somewhere in this time frame, this is maybe where the prices will collapse. Even if housing prices just roll over and start to decrease, the stock market and everything else will collapse after the real estate. Okay, so let's have a quick rehash of what we've just gone over. So obviously the 18.6 year cycle is pointing towards a 2026 top, 2025, 2026 top in the real estate cycle. Now, whether that happens a little bit before, a little bit later, it's hard to tell, but we are pretty well in line. Now, we are seeing housing prices increase in a lot of different countries, such as Australia, where we're reaching new all-time highs. The housing market in the US has got a massive shortage in homes, and if we take a look down, housing, construction companies are getting to cycle highs, if not all-time highs on their stock price. And of course, what does that mean? Where are we in the 4-quadrant model? Well, rents up, prices are up, construction is trying to meet that demand, and the next step over the coming years, of course, this is going to take a while. The time it's going to take to build 1 million US homes will be quite a while, unfortunately, for a lot of people who are, renting and all those different things. Sucks. It sucks to be in that position, but this is going to take a long time for housing prices or for the supply of housing to meet the demand. And in the interim, whilst we wait for that, housing prices will likely increase all the way into 2026, before, or maybe 2025, 2026, before we see anything really significant happen. You can see our drawing. Housing prices are almost at an all-time high, and there's a good chance that they continue up. How exactly they continue up? Maybe it's like that. Let me come down. Something like that, maybe. But it's kind of crazy that housing prices are continuing to increase, and this is going to be really, really bullish for things like the stock market, things like the Bitcoin and your cryptocurrencies. How we want to think about real estate is in the market. I'll draw a diagram for you guys. So how we want to think about real estate is, or how I like to think about it, is that if we've got a giant pyramid of the economic, or of all markets, if we think about the top being real estate, if we think about the top, the absolute most important aspect of the economy is real estate prices staying high, because obviously the banks are incredibly closely linked. And of course, if housing prices are strong, we see an uptrend in the market. If housing prices decrease, the market will typically go down. Same thing again, what we're seeing right now. Housing prices are super strong. We see a small decline in housing prices. Stocks go down. Now, where are we? What were we just saying? Well, housing prices are starting to increase again. So what we would expect is that basically the stock market will likely increase now. So if we go back to our chart, if we think about, it's kind of like a trickle down of a big pyramid. We've got real estate, the big, most important aspect of the economy that feeds into other markets. Then we have things like the stock market. The real estate market being strong and increasing in price will lead to higher prices in the stock market. The gains, the wealth that people gain from real estate trickles down into stock markets. Obviously, people who sell their houses and make tons of money, they then go and invest in the stock market. People who invest, in the stock market, I've made a bit of a mess of this chart. Let me just quickly tidy that up. People who make money in the stock market, obviously then, will probably feed that money into smaller things such as cryptocurrencies. And then people who make money from crypto probably go and buy things like even more obscure more obscure assets. It could be cars, it could be watches, it could be, you know what I mean, if you kind of get the picture here. So real estate strong is the big base. Though the gains from that, the wealth that is built from real estate, then will trickle through into other aspects, such as the stock market, such as crypto, such as all the way down to things like watches, cars, and all those different things. So as long as housing prices, as we can see, I'm still on my pen, as we can see, if housing prices can continue to rise, expect stock markets to rise, expect cryptocurrencies to rise, expect the value of your watch to rise, I don't know, any assets that you hold, and we will expect to see, things all come to an end around 2026, 2027, 2025, sometime in that time frame. Now, if you guys did enjoy and you found this content helpful, I'm going to do update videos on this when I can. Obviously, if we see significant changes in the housing market, obviously the housing market is a lot slower. It takes a long time to obviously do things like build 1 million homes, or whether it's trying to meet the demand, or housing prices start to decrease. There's a lot of time in between major events in the real estate cycle. So I will keep you guys updated, but they will be a long time apart because nothing really changes in the short term. But if you did enjoy, remember to like and subscribe. Let's get up to 300 subscribers. That'd be greatly appreciated. I've got referral codes down below as well. So if you use any different cryptocurrency exchanges or anything like that, and you're keen on getting some free money, basically, you feel free to use my referral code down below and get $10 worth of free Bitcoin and your Aussie exchanges. And I'll see you in the next one.